Good morning, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, bringing you the highlights from yesterday's action on Wall Street, and oh boy, was it a day to remember. So, here's the deal. The markets hit the jackpot yesterday with the Standard & Poor's 500, the Dow Jones Industrial Average, and the Nasdaq Composite all soaring to new highs. It's like the markets took a collective breath of relief after the Federal Reserve's latest move. Or rather, its decision to not make a move by keeping interest rates steady. Now let's dive a bit deeper. The Standard & Poor's 500 didn't just rise. It leaped, closing above 5,200 for the first time ever. That's a 0.8% jump for those keeping score. The Dow wasn't far behind, popping about 1% to close at an eye-watering record of 39,512. And the Nasdaq Composite? Leading the charge with a rise of more than 1% to a record level of 16,369. What sparked this rally? Well, alongside holding rates steady, the Fed stuck to its guns with the projection of 3 rate cuts this year. That's music to the market's ears, aligning perfectly with what investors were hoping for entering Wednesday. But wait, there's more. The Fed's dot plot, a kind of map forecasting where rates might head, suggested we could see rates drop to 4.6% by the end of 2024. That's a 0.75% cut this year, folks. The bond market had a more muted response, with yields on the 10-year Treasury ticking down slightly to about 4.28% after a significant rise in the past 2 weeks. In a nutshell, yesterday's market response underscored a broadening rally, with the small cap benchmark index rallying nearly 2% and 6 out of 11 Standard & Poor's 500 sectors climbing more than 1%. So, what does all this mean for us? It signals a market brimming with optimism, banking on a softer landing than many feared. As we look ahead, the landscape is ripe with possibilities, and investors are clearly betting big on the future. That's a wrap for today's Capital Markets Quickie. Thanks for tuning in, and remember, in the world of stocks, it's always wise to stay informed and agile. I'll catch you all tomorrow morning with a brand new episode. Cheerio.